the days of buying a house for 250,000 are probably gone.
100%. I agree. So what is the typical rate right now?
We're in the sevens. If you're doing an FHA loan, they're in the sixes. You can get 6.5. It's really credit score driven.
Okay.
And it's down payment driven. So the more you put down, the better your credit score, the better your rate. An interesting thing about rates that most people don't know, probably the highest rate you're going to pay is putting 20% down.
Really?
Right. And so, right, like you just gave me a little inquisitive, like, really? So you're buying a $400,000 house, and you're saying, I can have this person, put 20,000 down. You want to put 80,000, and you're going to have a higher rate. Probably. And the reason is, at 20% down, you now have no mortgage insurance.
Correct.
At 19% down, the bank has protection. And for those that don't understand, mortgage insurance came into maybe 50 years ago, 40 years ago. Before that, you saved up 20% to buy a house. There was no buying a house with 2%. So from the bank's perspective, at 19%, they're getting a percentage of coverage if the house were to go into default. So the house, a $400,000 house goes into default, they may get $80,000 from the mortgage insurance company to help them sell it. So that house, they're offering a slightly better interest rate because they have more protection.